FATF recommendations for professional accountants. Due diligence locating potential new clientele. Due diligence continued vigilance. Record keeping / maintaining a log. Training and systems. Reporting of suspicion. Scope of FATF recommendations. Professional accountants in practice are included when assisting clients in purchases and sales of real estate, managing a client's money, securities, and other assets, account management, bank, savings, and securities, coordinating contributions for company formation, operation, or management, buying and selling enterprises, as well as creating, operating, or managing legal persons or arrangements. When lawyers, notaries, other independent legal experts, and accountants participate in a financial transaction on behalf of or for a client, they should be obligated to report fraudulent / suspicious transactions to the appropriate authorities. Countries are urged to broaden the reporting requirement to include all of an accountant's professional responsibilities in practice, including auditing. If the necessary information was received in circumstances where they were subject to professional confidentiality or legal professional privilege, neither legal practitioners nor accountants are compelled to report their suspicions. Can we rely on this, however, if reporting to authorities is plainly in the public interest?